Hi everyone, I'm here today to talk about what I consider to be the single most important day in the history of investing. And that day is Wednesday, December 31st, 1975. So naturally, no doubt you're asking, what is it about that day that is so important, that has left such a mark on a world of investing? Well, that was the day that the world's first ever index fund began. The first index investment trust was the name of the fund, and of course, who was behind it? The late great Jack Bogle of Vanguard. So for me, that single day is so incredibly important because of the effect, the massive impact it's had on the world of investing. It's positively affected so many investors around the world and will continue to do so into the future. Now, I've lost track of the amount of books that have been written about index funds, the amount of personal finance authors that have advocated this style of investing. Okay, I'll kick off with, for example, Millionaire Teacher by Andrew Hallam. Now, this is the book that got me started on my investment journey. Andrew Hallam, when he's writing, whether it's Millionaire Teacher, Balance, his most recent book, or books such as Millionaire Expat, Andrew Hallam writes so extensively about why it's so important to follow an index approach to investing. What else do I have here? The Simple Path to Wealth by J.L. Collins. A fantastic book, and I know J.L.'s talk on index funds while he was speaking at Google has been viewed around about 1.6 million times. So that speaks to the expansive and positive influence that index funds have had on contemporary investors and investors into the future. Okay. Incidentally, I'll be interviewing J.L. Collins on a future episode of the Sloth Investor Podcast, so be sure to check it out. We'll be discussing the Simple Path to Wealth and his most recent book, Pathfinders. The Coffee House Investor. Investing Demystified. Last but not least, The Power of Passive Investing by Rick Ferry. I could speak about more, but quite simply, there are so many books that expand upon the importance of index funds. Okay, so let's just think about the reasons why the index fund has been such an amazing innovation in a world of investing. First and foremost, I'd say simplicity. Very often when one thinks of finance, investing, the stock market, it's quite easy to become overwhelmed with facts and figures and approaches to investing. How should I invest? Should I hire someone? But Bogle's innovation, the index fund, is just genius, utter genius. When it was released, it was deemed as being un-American. And a magazine article, I think it was Time magazine at the time, referred to it as Bogle's folly. But it's been such an amazing innovation, okay? To simply own so many companies in one single basket, okay? That index. Whether it's the S&P 500, whether it's a global index, which is the approach to investment I particularly advocate, the simplicity is key. 2, low fees. So many people, even in 2023 and beyond into 2024 and so on, I'm sure will continue to pay high fees for their investment products. But as Bogle states, this is not necessary. Okay, by simply owning a broadly diversified portfolio of companies within an index, it is not necessary to pay high fees. Low fees is one of the hallmark characteristics of the index fund. And I just think about the books that have been written in recent years about Bogle and the influence that he has had on a world of investment. And the first of those books is The Bogle Effect by Eric Balchunas, which was published in 2022. Now, Balchunas writes in great detail and at great length about the monumental influence that Jack Bogle has had on a realm of investing. This is a key part of the text that I really loved. He states, the compounding effect that Vanguard experienced would become a fitting parallel to the compounding effect of buy and hold, low-cost index investing that Bogle preached relentlessly for about 50 years. In short, hang in there and don't do anything stupid because it will start to add up. I spoke to Eric Balchunas, the author of The Bogle Effect, in episode 27 of the Sloth Investor Podcast. Eric spoke about how Google simply defines Jack Bogle as being an American investor. However, during the interview, Eric mentioned that Jack Bogle is so much more than a simple definition. This is what he had to say.
Yeah, because when people think of America, I mean, he was an American investor. It's not totally wrong. It's just, I know that a normal person, when they hear that, they think of a Warren Buffett or a Peter Lynch. They think of an active investor, somebody who was able to like outsmart the system and make a ton of money, right? This is not what Jack Bogle does. I will say, what he did was made everyone a better investor. But really, I think the two things that the reason I compare him to Steve Jobs and Martin Luther and why he's such a fascinating study is that he made the products, just like Steve Jobs made the iPod, the iPhone, the iPad, and Steve Jobs also put stuff out that, like let's say in early days, and then he'd make it smaller, more memory, and cheaper. Every new model was able to sort of cannibalize itself and the old one a little, and in that way he revolutionized tech. And I think Bogle did that with introducing low-cost index funds, and obviously lowering the fees over the years, and just building the product, which made managing a company, leading people, having a vision, like it is tough to do all that, and he did that. That's the practical side of Bogle. The Martin Luther is just this Bogleism that is spreading, which is beyond Vanguard or his funds even, because I was just at the quote Bogleheads conference, and they have chapters. I mean, it's literally like a religion that is spreading across the globe, and I call it Bogleism. And a lot of them, they don't necessarily use Vanguard funds. Some people do. Some use Vanguard funds on Fidelity's platform. Some just use Fidelity's cheap funds or Schwab's cheap funds. But they're all cheap because of what Bogle did. So in a way, what he spread was low-cost investing, not a lot of trading, good behavior, sound tax work. Just that's sort of, I think, what he introduced. And just like Martin Luther was sort of a rebel within the church, I think Bogle was. I mean, he was constantly abrasive. He would, Martin Luther stuck it right to the church, in the church, giving sermons, and he basically created the Protestant Reformation, and, was preaching against indulgences of the church. And I think Bogle is very similar in that way. So again, his protest kind of against indulgences, which spawned a mini religion, I think that's why I would compare them to those two people. I thought about that a lot because those are names you don't want to throw around. I also wondered if I said Martin Luther, if people who weren't that steeped in history would think Martin Luther King Jr. So I had to, but I was like, no, I read up on Martin Luther, watched the documentary just to be sure, and I'm like, yeah, this is very Bogle guy.
One of my favorite parts of the Bogle Effect is when Eric Balchunas writes about the concept of addition by subtraction. Let's hear from the author himself about this.
Addition by subtraction was almost the title I gave the book. That's how big of a deal. When I locked into this concept, I said, that's Bogle's life work. When he entered the fund business, basically a mutual fund would charge you 1% management fee, and then the trading cost would be about 1%. So 2% between you and the market, right? Now, maybe you got lucky and that manager did well, but most of them don't. So we'll just say that's 2%. So what Bogle did is he got in there, and over 50 years, took him a long time, he removed almost the entire 2%. So there's nothing in between you and the market. He also removed intermediaries. He set up Vanguard where he wouldn't use the broker system. So you had to kind of leave all that and come to Vanguard. So he eliminated the broker as well. Although now people use advisors, it's not totally black and white, but let's just say he removed that. And by giving a cheap index fund, I think he also removed the human behavior element. I think it's way easier to behave and hang in there in the down markets when you have a cheap index fund because you feel like you have the best deal. And a good chart that he uses back to that 2%. And I thought this was a great way to sell indexing in the 70s and 80s when, indexing sounds average, and also you're not paying brokers. So you have an uphill battle here to sell this concept. And I really studied how did he sell this to Americans who are all about number one, Top Gun, best of the best, right? Average is not what we want. It's not intuitive. One of those ways is to show a chart of the growth of $10,000 over 50 years. In one line is you getting 8% annually, and the other line is you getting 6% annually. And the 6% annually over 50 years, you end up with like, I don't know, it's like $160,000. But with the 8%, you get like $310,000, like basically double. Now you put more than 10,000 at the beginning, and you could see the amount of impact that has. The costs just mess with compounding, and compounding is the magic. Compounding is the secret sauce of investing. It's the magic, and the only way to benefit from it is to remove as much cost as possible and be patient. And I think that is ultimately what he did by taking all that up. And so I think index fund investors these days, they get, their whole market exposure for like 3 or 4 basis points. There's no turnover cost, so it's a clean, frictionless exposure. They view that as their alpha. So I just think the addition by subtraction is alpha generation, because essentially and it's locked in alpha generation. It's not like I might do it this year and not the next year alpha. And I just think that's profound, and most people recognize it. And that's why in bear markets, you see index fund investors, especially Vanguard, takes in money like nothing's wrong. And I think that's because he provided that addition by subtraction, and that's the mindset those investors have. It's unusual. I don't think in historical times, we've never seen investors this well behaved as the ones that are in Vanguard funds and other cheap beta type products.
Okay, let's watch one final segment from the interview now. Here, Eric Balchunas talks about Jack Bogle's love of a short story that centers upon a hedgehog and a fox. This is what he had to say.
Yeah, to summarize it quickly, it's basically the story of like the hold on a second. I gotta recall it myself. It's been a while. I wrote I wrote that about a year ago. So it's basically something where the fox is thinking all of these creative ways to try to outsmart the hedgehog, and the hedgehog simply just goes up and curls into a ball, and basically is able to elude getting eaten or become prey. And the idea it's a basic. There's a little more to the story, but the basic premise is that the fox is very clever and knows all these clever things, but the hedgehog knows one great thing. And that's all that the hedgehog needs. And so this also speaks to that, what we just talked about, which is that he thought the index fund investors were the hedgehogs of the investment world. And you've seen there's a whole area of the investing world where people have all these formulas. They think they've solved the puzzle. They're fascinated by all the data, and it's fun. I mean, people like it. It is fun. It's like trying to solve a puzzle that can really never quite be solved. And it really is fun for the brain to be active in that way and to look at the data and look at all the trends. I get it. I get why it's fun. It's just tough. And you can see why somebody comes along and they're able to drop all these fancy terms, speak in Greek symbols, and they impress you. And I see it on Twitter. Those people get a lot of clout. And then someone who's an index fund investor comes along and says, yeah, I just buy the S&P 500 index fund like every month, and that's all I do. Well, that's boring and it sounds simple, but over the course of 50 years, you know who will win that return battle, and likely, I guess. And that's sort of, I think, the point of the story. And what I think Bogle was trying to defend the index fund investors over the years. He also was trying to explain that it doesn't have, it's because it was looked at as simple and dull. And a lot of people think complexity is good and excitement is good. And he was always trying to sort of judo style turn that around and explain, no, this is actually cool. This stuff is good. And he just came up with all of these ways to do it in his books and in his speeches. And I think that story was one of those ways. One
of my favorite sections of the book is when an author writes about high-profile people that use index funds to invest. And one such individual is Michael Lewis. Okay, so in the book, Eric Balchunas shares an extract from an interview that Michael Lewis undertook with MarketWatch several years ago. And this is what he had to say about investing in index funds. I've always been a boring and conservative investor. I own index funds and I don't time the market. I put it away and I don't look at it very much. I think the best way is a low-cost index fund. I do not think people really should be making individual stock picks with their savings. I think that's generally been demonstrated to be not such a good idea. If you want to do it as entertainment like gambling, like you bet on football games, fine. But I think you're better off in a low-cost index fund, like a Vanguard index fund. Okay, so this is someone who is a former bond trader. He's written extensively about personal finance. Like I mentioned, he's written several well-renowned and very high-selling personal finance books. And yet Michael Lewis is still someone that uses index funds himself to invest. Okay, so I think it's a very important lesson there. Another book that explores the monumental influence of index funds is Trillions, which was written by Robin Wigglesworth and released in 2021. Okay, and this is what the author has to say about index funds. The index fund is one of the few truly, nearly unambiguously beneficial inventions, a disruptive technology that has already saved investors hundreds of billions of dollars, sums that will undoubtedly reach trillions in years to come. High praise there indeed by Robin Wigglesworth in his fantastic book, Trillions. What does Warren Buffett have to say about Jack Bogle and the index fund? These are his words. Jack Bogle has probably done more for the American investor than any man in the country. I estimate that Jack, at a minimum, has saved and left tens and tens and tens of billions in their pockets. And those numbers are going to be hundreds and hundreds of billions over time. So what about Morgan Housel, author of The Psychology of Money, which has now sold a staggering 4 million copies? How does he invest his money? Okay, well, in a 2017 interview, Housel stated that he invests in just 2 products. He's got shares in Berkshire Hathaway, which is of course Warren Buffett's company, but he also invests his money in a Vanguard total stock market index fund. Okay, so again, it's high praise indeed for the validity of index fund investing. Okay, so I'll finish this video again just by restating those books that I referenced earlier, each of which references index funds as being a core approach to investing. Okay, it's Millionaire Teacher by Andrew Hallam, The Simple Path to Wealth by J.L. Collins, and don't forget to check out my upcoming interview with J.L., and it should be released around about mid-December. Okay, Investing Demystified by Lars Kroyer, The Coffee House Investor by Bill Schultheis, The Power of Passive Investing by Rick Ferri. This is a book I referenced earlier. It's a fantastic book that really goes into great detail with regards to how the index fund revolutionized the finance industry. Eric Balchunas, The Bogle Effect. Okay, and if you're keen to learn more about the Bogle Effect, you can watch an interview that I undertook with the author around about 12 months ago, and I've also got a summary of the book which you will find in the description to this video. So what are your thoughts? December 31st, 1975. That's what I consider to be the most important day in investment history. Do you have a different day? Do you agree with me? Are you an index fund investor yourself? Perhaps you've got another book that you would state that has a strong connection to investment funds. One that immediately comes to my mind is A Random Walk Down Wall Street. Okay, but I know there are many others. I profiled 5 or 6, but I'd love to hear more from you guys about any other books that feature index funds as being the key core way that investors should invest. Okay, so I'll leave it there for now. If you enjoyed this video, don't forget to like and subscribe, and keep on investing and keep it simple, just the way that Jack Bogle advocated. Bye for now.